Hey everyone, good afternoon. It is 1:30. The market's just closed here on Wednesday, so let's go ahead and take a look. Obviously, the big thing happening for the rest of the week is the USDA report on Friday. So you've got traders trying to balance for positions for going into that report. And on the screen here in front of you is new crop soybeans. And I've got this kind of muddied up here with a lot of indicators because what I want to show you are the divergences down here on all of our oscillators. So this from these peaks back here to this low, you have big, strong momentum. You have a rally which got into neutral or overbought territory on all of these oscillators. And now you have this low that tied on the closing basis, this low right back here. So, but with shallower lows on the oscillators, which is a bullish divergence. And now you have a secondary high and a new low with a higher divergence yet. So now you've got a triple bullish divergence on new crop soybeans. And this can go ahead and roll over and continue to diverge, or it could pick up momentum and go ahead and make new lows with momentum indicators. And certainly that wouldn't be that surprising given how bearish the fundamental outlook for beans and corn really is. But on the other hand, the odds would favor a consolidation or bounce from this level because of these divergences. Now they don't confirm until you get some sort of strength or reversal pattern forming, and we thought we had that earlier today, but they just couldn't hold on to them and ended up selling off. Now, old crop beans were actually weaker than new crop beans today, and they really got pressured right at the end, right in the last 30 minutes of trading or so, falling from yesterday's low all the way down to test the $14 a bushel area. We'll see if those hold. Obviously, these two swing lows right back here have held so far, and as long as they continue to hold, then you should look higher. But obviously, a trade below 14 with any acceleration at all is probably going to have to get sold because off we go. So from a divergence standpoint, we do not have the divergences on this chart that we do on the new crop, with the exception of off of this move right here. There is a divergence there, but you can see this getting ready to cross. It could accelerate lower and take that divergence away. So it's not really tradable at this point. But so if you're long beans, you're really just thinking about, hey, long above 14, short below it, because eventually that area is going to give way, where they're going to bounce from it or come down through it. And with the South American crop being what it is, I wouldn't be a bit surprised to see it give it up. But they've been resilient and they've held on really well. Now let's look at corn, because corn really did have a significant day today. Let me take the force index off of here. You can see the bullish reaction here. So this is kind of interesting. Yesterday we completed what's called a 3 inside down formation, and you've got a full body of this candlestick that is in the top third of this one, and then from there we just accelerated lower and took out this low, which is a 3 inside down formation, which is bearish. Then today we tried to follow through, but we got bought and reversed from it. And I thought for a little while today we were going to hold an outside day double close key reversal combination, which would have been awesome. But obviously we were unable to do that. So this is really anybody's best guess as to where old crop corn goes from here. I can make the argument that it should be bought and we should come back up and test the 610 area. And I can make the argument that anything under 6 to 608 needs to be sold, because it's just a rally after this down move. So, we'll see. You got a bearish signal, you got a bullish signal, and now you need more trading action to understand what corn is really planning to do here with itself. And we don't know. I can read and justify positions both directions there. New crop corn is actually more bullish. Oh, it's interesting. There's a 13 on new crop. It's the first time I've seen the 13 on there. I have not looked at this particular chart yet today, but we did make a new low and we have a red 13. Let's see if we've got divergences here as well. Yes, we do. We have divergences on stochastics. We have divergences on RSI and on force index. So corn has diverged from this low here that had lots of momentum to this one, and now we have another reversal right here at 512 coupled with the 13. So that ignites a buy signal in our book on any strength up above this. So we had previously said, hey, we're going to lift hedges. Obviously, we were dead poor in our timing there because we lifted them here and down we come. So we were wrong. And now the question is, do you go ahead and rehedge it and get back in, or do you wait and be patient and give it a little bit more time? And with the 13 and these divergences in play, I would give it more time. Just because you're wrong today doesn't mean you're going to be wrong tomorrow. And here we have a new signal. And I think I was clear when we did this that I was front running a bear trap here, that I thought we were going to go ahead and explode higher. And I was not really thinking about the 13 count because I wasn't watching that particular indicator. So that's okay. It is what it is. Doesn't change my mind at all. This signal's still in play. This signal is newly in play and should be and is a tradable signal from there. Now on this particular signal, where are you wrong? Well, it's 503. That's the low. That's the reverse and go short signal right there, and we'll see if corn can move on and do that. Remember, everyone is expecting this report to be super bearish, and we are too. We're expecting this crop report to show carry out in excess of 2 billion bushels. We're expecting it to show, 400 to 500 million bushels in beans. We are not looking for bullish reports here at all. So it's interesting to me that we're getting bullish divergences and buy signals ahead of this report, which is expected to be bearish. So we'll see. There's no guarantee that these buy signals will work. We could easily accelerate lower because you could go ahead and sell it. But nevertheless, on our system, that's a buy signal all day long and something that we want to honor and respect until the market takes us out of it. And I hope that makes sense to you. Now, here is Kansas City wheat. Kansas City wheat continues to impress to the upside, well over $1 off of its low from last week, and has absolutely buried anybody that was bearish since last February, right? It's really basically taken away any of your bearish gains. And so you've got a short position by the funds, you have a small crop with the farmer, and you're effectively below insurance prices. So you've got the recipe for this to continue higher. Most of our guys are telling us that between 950 and 10 is where it makes the most sense for them to go ahead and harvest if their yield is 15 bushels on their dry land. Anything below that, and it probably pays to just take the insurance and not worry about harvesting it. So you can see wheat continue to press to the upside here, and the fact that we broke up above both our cloud, our hedge line, and above this line, which is called the TDST line, which is drawn off of the high from where this price really accelerated lower. The fact that we've now closed above that on 2 consecutive closes would put the odds in favor of counting up towards a red 13 like this 13 here and the one that I just showed you on corn. So that would be a sell setup signal, but it would imply that an uptrend is forming here and that we should look higher for higher levels from which to sell from. Now, in order for that to really get going, obviously we've got to take out 885 and push up above these swing highs here and really up above these highs here as well. So wheat's not quite done. It's got more work to do in order to really establish itself into a bull move, but certainly this is a significant close. If you look back here, we never could get above the TDST line drawn off of this line back here, and we never could close up above it like we have on this one. And just because this one is below this one does not mean that it's not relevant. It's extremely relevant because it is the most recent, and that's how the charts are set up. So from a stochastic standpoint, wheat is slightly overbought maybe. From a RSI standpoint, it's just fine. It's just moving into trend mode. Force index, same. Probably maybe a little bit on the overbought side, but really it can stay that way for a long time. So wheat looks good, and I wouldn't do anything different with it other than just hold it, which I think also reinforces the bullish case in corn that we've talked about, and really helps to solidify that argument. And then I think that ultimately that leads to some buying in beans, even though they looked really, really bad today. These markets are really tough to trade because if you looked at corn yesterday, I mean, it really looked like death. I mean, it was terrible, right? And so were beans, so was everything. But by the end of the day, we end up with much weaker sell signals. We held support, and now today we have a new buy signal out of it. So let's go one day at a time, and let's take the signal most current and most recent, and let's keep taking it, and let's see what will stick eventually. Okay. That's the most prudent course of action to take, and certainly the one that makes the most sense. If you are nervous about the report and you don't have protection on, and you desperately want some, I would recommend some sort of spread action or put. I would just be long a put or long a put, short a call from up and higher levels, because you don't know how the market's going to react to it. Certainly, the most bullish thing would be a bullish reaction to a bearish report. And that can happen. It happened in August of 2020, and none of us understood why the markets reversed. And I don't think that we're near that bullish, so don't hear me say that. But we're kind of set up in a similar fashion, and I wouldn't be surprised to see either reaction come Friday. So if you're nervous about that and you want puts on, let's get them bought. No, I'm not going to argue with anybody that wants protection on. Otherwise, I think we're just going to sit tight. We'll be quick to hedge if it's bearish and reacts bearishly, and we'll be quick to recommend reownership if it does start to react bullishly and these divergences kick in. All right, that's 12 minutes. I hope that's helpful. I hope it provides some clarity as to what's going on in the markets. Obviously, it's a very, very complex time, and nothing is certain, nothing is a given in these markets. So stay nimble, stay tuned, and stay glued to us, because we're obsessing over the short-term action here, trying to make sure that we're positioned the right way and do the best job that we can for you guys. So if you have questions, call us, reach out to us. We'd love to talk to you about your risk. Thank you for listening. Have a great day. See you guys.